Okay, you have $1,000 to invest. Now, how do you go ahead and invest it? Well, today I'm going to share with you guys how I would invest $1,000 if I was new to the stock market. I can't wait to share this with you guys today. Good day, subscribers. Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and we're talking about how to invest $1,000. You know, you come across the stock market and you're like, I want to invest this $1,000. I want to try to make it into money. So I'm going to share with you guys how I would go about basically investing that first $1,000. I'm going to put it into 5 steps for you guys so you can kind of understand my viewpoint and why I would invest this $1,000 in the way I would do it, guys. So let's go ahead and get into this. Leave a thumbs up if you enjoy this video today. Leave me a comment if you have any questions or if you enjoyed the video as well. I would love to see those, guys. So, number 1, you're going to want to first find a company you feel very comfortable investing in, a business model that you understand very well. So, when you're first starting out into investing, you're a beginner in the stock market, you might not understand all the intricacies that we go into as far as looking at PE ratios, income statements, balance sheets, and all these super into detail type things that we look at as advanced investors. That's fine when you're a beginner and you're just starting out and you're investing that first $1,000, guys. The reason being is you don't want to overwhelm yourself where it's too much and you get too confused and you end up getting turned off from the stock market and you say, you know what, screw this, I can't deal with it, it's too much, it's too confusing. So you don't want to ever do that. And that's why I actually am against learning too much too fast, because you want to start dipping your toes in when you kind of understand a bit of stuff, but you don't understand the full gamut of things yet. Just because it's like a person that's never been in the gym before. They go to the gym in the day and their personal trainer says, okay, you haven't been in the gym in 4 years. Okay, well, here's what we're going to do. We're going to run 7 miles today. You can't stop once. You can't even walk once in the 7 miles. You got to run all 7 miles. Then we're going to go do squats. And then we're going to go do lunges. And then we're going to go do abs. And then we're going to go do bench press. And you get so overwhelmed that you're probably never, ever going to go back to that gym ever again as long as you live, because you're going to freaking die that day and you're just going to hate it. So same thing with investing. If you overwhelm yourself with too much right off the bat, it could actually hurt you and turn you off completely from the stock market. So that first company, step number 1, just find a company you feel very comfortable investing in. You understand, maybe it's Apple, maybe it's Google, maybe it's Facebook, one of these huge monstrous companies. Maybe it's Microsoft or Coca-Cola or Pepsi, McDonald's, one of these huge stocks that you understand their business very well and you would feel comfortable having that money in there for the next 10 years or 15 years if you had that money in there, guys. So that is step number 1. Company that you feel comfortable investing in. Find that company, and then we go on to step number 2, which is I would then put 2/3 of that $1,000 into that stock. So I would put $667 into that stock. That would leave me $333 remaining just in that brokerage account. So that other money's just chilling there. I get the $667 invested in McDonald's or Apple or whatever company I picked that I was really comfortable investing with. And then that goes into step number 3, which is you're going to want to watch that stock very closely. You want to watch everything that comes out of that stock, every bit of news that comes out, every bit of analysis from other people. Once again, now you don't want to pay too much attention to the analysis where you're making trades based off of what other people say, but you're willing to hear what other people have to say. That's the main thing, being willing to hear what other people are saying. So hearing that, paying attention to any bit of news that comes out of that company, any quarterly reports, any annual reports, you just want to pay attention to all that. Any comments the CEO or other executives make that are at conferences, all those conferences you can access on the investor relations page on basically any website. So you want to pay attention to that stock like you've never paid attention to something before. You want to track everything that's said from analysts that are saying things, from the CEO, from other executives, from, like I said, the quarterly reports. Track everything, guys. And all while doing this, also, you want to be finding that second stock you like. So you want to look out for that second stock. So you're investing in that first stock, you're paying attention to everything, but you're also looking for a second stock to invest in at this point. And this is the second part of step number 3. So you're finding that second stock that you love just as much as that first, if not you love more. And now with the second stock, you're probably going to be able to go more into depth on looking at things. So you might be able to look at some of those things you didn't look at on the first stock, go in depth depth on the balance sheets, go into the PE ratios and the forward PE ratios, and look at their future products and services that they have coming out, and kind of judge those for yourself. Are those going to be good things, and what's the analysis on that? So that second stock you're probably going to go into way more in depth, and there's a good chance you might end up liking that second stock more than you like that first stock, because you're going to go way into depth, and you're going to say, that first stock actually wasn't nearly as good as I thought it was when I first went into it. This second stock I'm really liking a lot. So that goes into step number 4, which is you're going to want to figure out if you want to sell any shares in that first stock. So maybe you do find that, you know what, that first stock, it wasn't as good as I thought. You know, I'm looking at the PE ratio, I'm looking at some of this more detailed stuff now, and I don't like that first stock I went into nearly as much. So maybe you want to sell half your shares in that stock. Let's say it went up a little bit now that your amount's worth $700. So it went up a few percent, you made a little bit of money. Great. Now it's at 700%. Maybe you want to sell half those shares and go ahead and take $350 out of that stock, put it with the other money, the other $333. Put that money together, and then you may want to go into step number 5, which is invest the remainder of that money into that second stock. So now, of course, if you still like the first stock the most, then you probably just want to keep the money in that first stock and just invest the remainder into the second stock at this point. But like I said, guys, the chances of you liking that second stock more than your first is super high. I'm just going to tell you guys, super high, because you're going to know way more stuff than you did when you looked into that first stock and you invested that money into that first stock. So your second stock could end up becoming your actual biggest investment. And at the same time, you want to track everything that comes out of both those companies. So even though your first investment might be a smaller investment now, you want to absolutely be paying as close of attention to that stock as you ever did. And the same thing with the second stock. You want to track every bit of news. And you also want to be looking into all the different types of investments, we talk about on this channel, from call options to put options, and kind of just raising your level of awareness, raising your intelligence on investing up to a higher and higher level. It never ends. It never ends. Even I'm still learning stuff 8 years in, guys. So you can still learn stuff, 6 months in, maybe you'll be at this time. So there's still so much to be learned out there, guys. So that is how I would go about investing that first $1,000 and how I would approach the whole process of investing that first $1,000. I hope you guys enjoyed these 5 steps on kind of hearing my perspective and how I would go about doing it, guys, because that's exactly how I would do it if I was investing that $1,000 for the first time, guys. If you come across this channel and your first time watching, you may want to subscribe. I talk about personal finance on the channel. We talk entrepreneurship. I'm a business owner and I give so many of my entrepreneur type tips away. And we also talk the stock market on this channel the most, including, investing in the stock market for beginners. Every week I break down stocks and all those kinds of things, guys. Thank you so much for watching and have a great day.